Okay, so today we're gonna do a couple things. Let me get to the slideshow. What? Oh, that one with the magnets. Okay, so today I was just going. So today's agenda, I want to walk through a pre-market routine that I think everybody should have one and develop it kind of on their own, but it came up with some ideas and some things I do before the market opens to be, best prepared after the bell rings. And then I wanted to share with you guys a different trade strategy. We've talked about the poor man covered call, and this is just a different version of it. So, I'll want to share it with you, and then we can walk through examples and things like that. So, and then the last thing I wanted to share with you guys is that our next meeting in person will be on January 20th. So, and it will be at the Total Wine conference room. So we're back in the Total Wine conference room for at least 1 month. And and then it will also be recorded. So be sure to mark your calendar. It'll be on January 20th at 6 o'clock as well. And then, so anyway, so the pre-market routines. Let me move this thing. Okay, so here's what I do um, in as I get ready for the market open. So the reason we do this is that you want to kind of know what's changed from 4 o'clock the day before till um, until the bell's about to ring. So the first thing that I do is I go online and I look at the overnight futures. And there's a couple places, a number of places you could look at it. But FinViz is a great website. Bloomberg.com also has it. And it's just a great place to see, how different markets have traded from 6 o'clock at night until when you get up. And keep in mind at 6 o'clock is when the Asia market opens, Australia and Asia markets open at 6 o'clock Eastern. And then at 3:30, Europe, opens up. So really a lot of times between 6 and 3:30, you might see a little bit of action, but from 3:30 until, 9 o'clock or 9:30 is really you will see a lot of activity that could be a precursor to how the market's going to at least open up. So the ones that I like to look at are the the S&P futures, the NQ, which is NASDAQ. And I also want to see what the VIX is because the VIX tells you, are we going, is the fear or elevated, withdrawing, that kind of thing. And then other ones that I always like to look at is gold and oil and the US dollar. So you want to see, how those guys are moving because if gold is up, a lot of times that's a defensive kind of sector, and that might, tell you that the equities are going to be a little bit impacted. The dollar is always good to see how it's doing. And then I want to look at how did the Asia markets do overnight and how is the Europe. And one of the particular ones that I like to look at in Europe is the German um, index, the DAX, DAX. So those, once I kind of look at those and look at the futures, and it doesn't take very long at all. So You just kind of look at them, are they up? Are they moving up? Are they, that kind of thing. Is the VIX up? Is gold and oil? Oil is interesting because a lot of times that's a very political um, based commodity. So, if there's news coming out of Saudi Arabia or the OPEC, it could impact oil. Or if they think, the economies are going to slow down, that can impact oil. So, once you kind of get it, go through and see those futures, at least you have an idea. Okay, what happened since you left, the day before? So, okay, so then after I do that, and that normally doesn't take very long at all. In fact, a lot of times what I will do is in the middle of the night, I'll flip on the TV and go over to Bloomberg just to see what the futures are there. So you don't even have to, you could just leave that on. CNBC does the same thing. And then the other thing that I want to look at is, was there any overnight news? Was there anything that's popping up? And one of the best places that I find is a website called investing.com. It's a free website, but it'll tell you kind of what happened overnight or since the market closed. And investors.com, that's IBD, also has a kind of pre-market a pre-market summary. Bar chart does as well. So a lot of good, what I would do is check a few of them out. And then once you get to, the ones that you like, then just, build that into your routine. Um, Another one is the Wall Street Journal. That's always a good source to see what's going on. So after I look at overnight news, um, and these guys are probably more kind of independent. They're not slanted one way or the other. And it's mainly focused on business impact. Um, and then the next thing I always try to do is I want to look at, like, are there any earnings coming up? Because that can impact either stuff you already own or stocks that could move the market. Like, just the other day, NVIDIA announced earnings on Wednesday after the market closed. So everybody was kind of on their, heels waiting for the NVIDIA. So there'll always be, somebody that is announcing earnings that you want to be aware of. And then the other thing that I would like to do is check the economic reports. And I use a website called forexfactory.com. It's another free website, and it gives you a calendar of all events, and then it also prioritizes the high impact reports. So some of the typical kind of reports are CPI, inflation, any Fed meeting, like if there's a Fed, interest rate decision, or if there's the minutes getting released and things like that. You want to know about that ahead of time so that, if you're in a trade and you're close to a profit, you might want to get out before those things happen. PMI is kind of another measure of economic strength. Jobs reports are really important these days because um, a lot of the rate cut decisions are going to be based on how the jobs do. So when they have jobs reports, and there's several, there's unemployment numbers, there's an ADP jobs report, there's one called the Challenger jobs report. So when you see one of these jobs report come up, you want to make sure you know when they're coming up so that you're not shocked if a market goes up or down 10 points in a 5 minute period. Um, and then the PCE, which is apparently I've heard is the Fed's favorite inflation report. So if that one comes up, I know I'm paying attention to it. So those are kind of real quick in terms of looking at, overnight news, earnings, economic reports. So any questions so far? Okay. Um, and I'm sure most of you guys do this. It's just kind of more of a checklist to make sure that, um, if you have a routine either written down or built in, it's really easy to stick to it. Um, the other thing that I like to do is I like to look at how the different sectors are going, and um, and one of the best places is FinViz. They have a section, and if you guys want, I can go and show you that website later to show you, um, how I look at like who's strong, who's weak, and go from there. So that's a great website. It's FinViz, and I just click on groups, and I'll show that to you later. The other thing I like to do is see where the overall market is. So if you look at like a daily chart where every candle is a day, I want to see, and I usually look at SPY, the S&P 500, and is the SPY over the 20-day moving average, simple moving average? Is it above the 50-day moving average and above the 100-day moving average? So if the SPY is above the 20-day moving average, I would consider that more of a bullish environment. And if it's below the 20 but above the 50, it's kind of neutral. And when a stock moves below the 100, you're definitely considered bearish. So that helps me to kind of like at the beginning of the day to look at the S&P, and you can look at the Qs as well for NASDAQ, but they're going to be pretty similar. And to see, where are we at in terms of a technical standpoint. So that's kind of so I look at the sector reviews and the technical snapshot. Um, so that is kind of what I do before I even, open my own trades. So, and I think if you kind of, build something, similar that works for you, you'll have a routine that you go, okay, the first thing I do is, open my computer and go through this list of stuff. So you have a better idea, okay, where are we at and all that kind of stuff. What's coming up during the day? And so you'll be better prepared. Um, and then, the next thing that I do is I will go through all of my open positions. And when I do that, I'm able to, see, okay, do I need any adjustment or take action? Am I close to my profit, or things like that? Then I want to look at the chart for those particular symbols to see, is it bullish, is it bearish, has there been a bearish reversal if I'm in a bullish position, things like that. So I can say, okay, based on this, I better be watching it closely. And then the second thing or the third thing I'll do is look to see, are there any news that came out on that particular stock? So I will look at, under bar chart, if you bring up the chart, you can see, are there any news items? And then the other thing you want to know is, when does this stock have earnings? So, if you're getting close to earnings, you want to be aware of that. Also, is there a dividend coming up? So that, that's something you want to be aware of. And then how close am I to having that option expire? So if the option is coming up at the end, on Friday, I want to pay, particularly attention to it versus next, the end of December. And then the other thing that I always like to do, just as a double check, is to see on my positions, do I have too much in any one sector? So that's also a good opportunity to go back and say, like, gosh, 3 out of my 5 holdings are in semiconductors. I better do something about that. So that's what I do when I look at my open positions. And then what I do as I go through this is I kind of make a to-do or a shopping list or a to-do list and write down, okay, on AMD, I better look to roll my short call. or on things like that, I want to make sure I'm adjusting it or coming up with a thing of things to do, or at least of things to say, hey, double check this one after the open, so that you have a kind of a game plan on your open positions. So that's kind of part of the market routine that I follow. And so, and then after that, you want to say, okay, I went through kind of the general market and the conditions. Now I want to like think about anything that I'm planning on putting on any new trades. And one type of trade is, I call it a campaign trade. Um, this is a trade like that you put on a trade every Monday, Wednesday, and Friday. So you just want to make sure that as part of your plan, like, okay, today's Monday, I'm going to put this trade on. And then I will look at my watch list or and say like, okay, these are trades that I'm going to consider. Let me go back and look at the chart. Let me, analyze it one last time and then add that to my to-do list. If it sets up as well after the bell. And one thing I will tell you is that a lot of times when you put, um, what you look at before the bell may change after the first, 10 minutes. Futures may be up and you're like, okay, I'm ready to do all this stuff. And then after 10 minutes, the market rolls over and pulls back and goes negative. So you want to kind of have a plan, but it's also based on when, what happens after the bell rings. So, you want to be flexible. So if you have a campaign trade, you want to wait for the timing to be right. And same thing with any other trade. You just don't want to blindly put a trade on because it was on your watch list if the market isn't working in our favor. So, any questions about any of that so far? Is this helpful in terms of like being being ready for the trading day? Okay. Okay, perfect. And then and in terms of open trades, kind of this is kind of what we um, I do is like any adjustments needed. So I may, if I have, 20 trades on, I may have 10 that I have to do something with. And then I'll also look to say, okay, it's time, even though it isn't hit my profit target exactly, but for whatever reason, it's time to take profits or it's time to exit if the trade doesn't no longer meets the thesis. So then I make my to-do list and I'm ready, waiting for the bell to begin. So, and George has a question, which is great. So, do you, Carol, do you want me to unmute you? If I can do that? Or do you want to just type it in, George? Carol, I'm going to unmute you and let you answer my question.
Go ahead, George.
Yeah, can you hear me?
Yes.
Okay. What you were saying before about before the market opens, you want to check to see how the market is doing before it even opens.
Mm-hmm.
Hello?
Go ahead.
Yes.
Yeah. Okay. So, like what happened on last Thursday, where the market exploded in the morning, the SPY went from 662 up to 675, and then all of a sudden started to roll over.
Yep.
Like a rock. It went from 675 down to about 654 or 652.
Mm-hmm.
You never know how, maybe at one point in the day, it's going to be moving in one direction, and then it could do something different the rest.
Right.
I mean,
That,
that was
that
unbelievable what happened on that
yeah.
day.
Yeah. I think that was definitely an outlier, George. But
I,
your point is, we had NVIDIA earnings the night before. So earnings always impact the market. And I think that was kind of more of a one-off, but you're absolutely right that the market will change during the day. But I guess the point of the pre-work is to kind of know what you're walking into. You don't want to like open and I know nobody does that, but you don't want to walk in there um, and not know, what happened overnight, what economic reports are coming up, what big companies had earnings, so that at least you have a game plan. And it'll change, like you said, because once the market opens and there's a tweet out there, it could change things in a minute, but at least you're prepared up to that point. And that was a really strange day where, NVIDIA had great earnings. The market, the stock went up, everything was cooking, and then all of a sudden, everything, kind of rolled over and went down. So, great point. But so, I think what you want to do is you want to be prepared, but know that it could change after the bell, and it often does. Um, so. So once you kind of, make your list, wait for the bell. And one of the other thing that I would say is you don't want to, make a trade as soon, as the bell goes, unless you're trying to take profits. But, but so you want to give it a little bit of time. So, and then I'll just ask anyone in the group, what did I miss? What do you guys do? As part of your pre-market routine that I didn't cover. So let, us see. Um, yeah. So, Peter said it's impossible to know what a market will move ahead of time. Definitely. I mean, that's the reason we all have gray hair, right? And it's just, that's part of the fun. And someone said, drink plenty of coffee. Absolutely. Thank you, JS. That you definitely want to be, prepared. You want to get all that stuff, be ready so that you're sitting in front, you've done all your pre-work, you have your plan of action, you're all set, and you can be relaxed and watch the first 15-30 minutes before you um, have to really start working your plan. So good point there. Anybody else? um, some people will say, I want to turn on CNBC and Bloomberg and all that stuff. I don't. I just try to keep to the market itself and not really worry about um, what the talking heads are saying, because I think a lot of people will say they're wrong most of the time. So anyway, so I hope that has helped a little bit in terms of being ready for the market open. So uh, with that, I was going to share with you a new version of our poor man cover call. So what this is, I don't have a fancy name for it, so I apologize in advance for that, but this is a stock replacement strategy, and it functions pretty much like buying shares of stock. So that's kind of the main thing, and it will absolutely limit your downside risk ahead of time when you put the trade on. And if you want to, you can sell calls against this position, similar to a poor man covered call or even a covered call. And on the downside of this strategy, you won't be able to collect dividends because you actually won't own the shares. So that is kind of the basic stuff. So here's a quick example, and I used NVIDIA just not endorsing NVIDIA at all, just trying to kind of give you an example. So I did this stuff this morning. Let me see. I did it with NVIDIA, so it was about 179 a share. So if we just bought 100 shares of NVIDIA, it would cost us $17,892. So that would be, you could buy less shares. If you bought less shares, you couldn't sell calls, but 100 shares would cost you $17,900 rounded up. Or the different approach would be if you bought an at the money call and sold an at the money put and then bought an out of the money put for downside protection, that would function as a very close to a synthetic stock position. So in terms of the NVIDIA, I just chose January and I bought the 180 call. I sold the 180 put, and then I bought the January 175 put. So that trade would cost me $11.30. So that's $1,130. And the net delta on that trade is 59.55. So it's not 100% replacement. And the reason it's not 100% is because we bought that protective put. That reduces our net delta. So if we had just bought the 180 call and sold the 180 put, it would be a 100 delta position. But this one, since the strategy calls for buying a protective put, it's a little bit less. So that makes sense, everybody? Okay. Okay. So if um, if you used a standard 8% stop loss, so if the price drops 8% from the time you bought it, you would exit. So that would be in this particular case, it would drop to 164.92 or 14 points. So on a stock position, if you lost 14 points, $14 times 100 would be a loss of $1,400. If you did it on the stock replacement, it would be $14 times the delta, 0.595, or $833. So a little bit of difference there if you use that 8 percentage, stop loss. And so on the stock position, not that this would ever happen, but your max loss is what you paid for the share. So if NVIDIA went, to zero, you'd lose $17,000. It's not going to happen, but that's your max loss potential. And under the stock replacement, no matter what happens to NVIDIA, this trade is capped at 1630. So has a defined downside risk. So that kind of the basic setup, and we'll go to an option chain and kind of show you how to set them up. Does that sound good? Okay. And then on the profit potential, if the stock price moved up $5, so it moved up to $184. So $5 would be $500 profit divided by the risk or how much capital you tied up, which would be about 2.8%. So 500 divided by 17,892, 2.8%. Under the stock substitute, the $5 move times the 0.59, which is the delta, would be about a $298 gain. So, and if you take that 297.50 divided by 1130, it's like a 26% return on risk. So you make less money capital wise, but it's with a lot less capital. So, what I'd probably say is I wanted to get 100 share equal to 100 shares, I'd probably have two contracts. Then you're matching, the dollar gain. So that's kind of how it would work if the stock went up or went down. So that is how it is set up. So I'm going to show. Let's see. Any questions about that? I know there's got to be questions. You guys. Um, so what I'll do is I'm going to show you um, it on the option chain. Would that be okay? Okay, so I'm switching over. So here is Glenna wanted to know where the 59 or 0.595 came from. I'm going to show you in just a second. So that's a great question. So can y'all see my NVIDIA option chain? Okay, I'm assuming y'all can see. Yeah, okay, thanks, Ron. So here's NVIDIA, and I'll go to the January um, expiration. So here's NVIDIA. So, we'll look at it based on current numbers. If we look at the current price, 182, 182.55, let's just do 183. So in this particular case, I'm going to buy the 183 call. I'm going to sell the 183 put. So let me go here. And then I will go in um, and then you could buy this put. So this is okay. Let me show you this first. So if you buy the call at the money and you sell the put at the money, you see here where it shows Delta 100. Can y'all see that okay? Um, that means that this is exactly the same as buying 100 shares of NVIDIA. But it still costs us much money. So if we go in here and we buy a protective put, now my delta is 55.9. So so that is where that number came from, Glenna. Does that make sense? So now this position will function as me buying 56 shares of NVIDIA. So that, and you could, the question was, is the 45 or 60-day time frame? It really just depends on what your horizon is. I mean, you could go out and say, I'm going to do it in 30 days. So you could do it that way, any time frame, but I wouldn't do it too short because, you do have some theta involved. And then you could show here that the maximum loss here is $1,500. So that is, no matter what happens on the stock, that is the most this trade would lose. And the max gain is unlimited because if Nvidia doubles in price, that for every dollar that Nvidia goes up, your price is going to go up 0.56. So 56 cents on every $1 move. So that's kind of what's nice about the trade. It has very low capital requirements. You're putting this trade on for $1,500. Um, and so your protection is actually the second long put, the 177. That is your downside protection, which keeps it from being a risk all the way down to zero. So that is kind of the setup. So, and this is an expensive stock, right? It's $182 per share. So you could do it on, a really low price stock and it will be, probably a couple $100. Does anybody have a low price stock that they like to trade? And I'll be happy to see what it would look like. Okay. Okay, SoFi. Let's look at. let me look at SoFi. That's a really popular stock, and it probably fits in perfect. But I'll do CRWV in a second. So here's SoFi. This is a $27 stock. So if you bought the shares, it would cost you 2,700 per contract. So, you could go out again and you're buying the 27 call and you're selling the 27 put. So again, we're back to 100 delta. And if I want to just add some protection, I'll do a $2 protection. So instead of $2,700 for the trade, it's now only costing me $226. So you could see why it's a pretty cool setup. And the most it could lose, so if Sophie went out of business tomorrow, the most you could lose is $426. And and a question I had when I first saw the strategy is, well, how do you come up with $426? And that is what you paid for the stock. This is a debit plus the width of the spread. So 226 plus $2. And so that's kind of the way, and you could make this bigger too. So this one now costs less money, but has more max risk because you widened the spread. So is that help, JS? And then I'm going to do Bud's thing. So actually, before that, Eric had a question. What are the adjustments to the strategy? The biggest one is that you can sell covered calls against it. So, in this particular case, you could go out on this one and sell, uh, this week's call, you could sell you know, pick one. You could pick a 28.50, and that would pay you about 32 cents um, credit. And against a 226 risk, it's about a 14% return. So, it has a lot of potential for selling calls against it. The other adjustments I would make are I would just have a really strict, when do I get out and what's my price? Um, similar to a like if you just bought stock, you'd want to know when I'm gonna, what's my profit target and what's my thing. And I don't know how to make the option chain any bigger. So if you have yours and you want to just kind of follow along, and then CRWV was Budded Suggestions. That's a $73 stock. It's trading right now at 73.61. So we'll just change the date. Let's just go to the December 19 expiration. And since we're at 73.61, I'm going to go to 75 only because there's no open interest um, except for 72.50 and 75. So I'm going to buy the 75 and I'm going to sell the 75. So this gives me a 100 delta position. And then I can go in and say I'm going to buy um, the 72.50, just trying to um, kind of lock in my downside protection. So in this particular case, it will cost me $510 to put this trade on. So that would control 58 shares of 58 delta, which would be equivalent to 58 shares. And if I bought 100 shares, it would cost me $7,300. So that's kind of the benefit. And the most I could lose on this trade is $760, which is $510 plus the 2.5 in the spread. So, and then from that, off of that, I could sell calls every week against them. So that's kind of the setup there. Amanda wanted to look at CIFR. Okay, so this is a $16 stock, and you could do the same thing. Just if you want to go out 25 days, you buy the 16 probably, you sell the 16, and then you'd buy the 14. So this trade would cost you $160 to put on, and it would control 77 shares of stock. Um, of shares. Now, Eric had a great question. How do you determine the width of your put spread? That's really, I look at it and say, how much do I want to have at risk? The maximum I want to have is my max loss. So if I want to lower my cost of the trade, I make that width bigger and it costs less money, but I have more total risk. So if you're sticking to that 8% rule, you might want to go to that, where that 8% would have taken you to. But but it really just comes down to, how much of a max risk do you want to lock in? And it's a great question. So so anyway, that is a couple of examples. I'll do one more and then I'll show you guys my couple of those chart. So Glenn had a really good question. When do you exit the trade? I would set it up based on when you put the trade on. I would say if the stock gets to $105 when you bought it at 100, that's when I get out. You just close it then. If it breaches your stop loss level, you just exit the whole trade. And then FCX, a $40 stock. So you would just, in this case, you'd buy the 41, you sell the 41, and then you can pick whichever one you want to do. So in this case, in, instead of buying the shares at $40 a share, you're controlling 69 shares for 84 cents or $84. So it's a pretty, and then you could write calls up against it. So it's a pretty cool strategy. Um, and how do you determine the underlying? So you would actually do all of your homework on the stock. So if you think, that a particular stock is going to go up in value, then you can, once you've done all the homework on the particular stock, then that's when you would kind of look at this as a way, not the only way to play that trade. And you can also, not to make it even more confusing, but if you were bearish on a particular stock, you just flip it around. Instead of buying the call, you sell the call and buy the put. So that just makes it, you can easily turn this into a bearish strategy. So, does that help? Um, so anyway, so I was going to show, if you guys want to, I can show you, um, and then would you take a high beta stock or low beta? I mean, it really, I don't think it matters a whole lot because it's just like, if you had a stock, any of those ones that were mentioned, you could either buy the shares or you could set up something like this, or you could just do the regular old poor man's covered call. Um, and what are the calls and what strike price? So what I do when I set this up is I'm going to buy the call closest to at the money and sell the put at the same strike. So, and so I'm not sure how to do. Ron wanted to know, how do you see the delta and max loss numbers on toss? I know we have some toss people out there, so I'll let them answer that question. But has looking at the charts helped at least make how to set them up? Okay. And then I'll show you a couple of the different websites if you like, just to um, as part as the pre-market routine. So I'm going to show you FinViz. So this is one that I like in terms of which groups, you have this heat map, which is important. It shows you what stocks did well today and which ones did poorly. But if you look at groups, you can look at um, what sectors did the best today, 1 week, 1 month, 3 months. So if I was looking, for a new position, I'm going to be looking to see what sectors have consistently been in the top tier. So just, healthcare was you know, okay today. It was strong for the week. It was very strong for the month, strong for the 3 months. So that's a sector that I would look at. If I was being bearish, I would say, okay, what sectors are doing the worst? You have industrials and technology. You have technology. Um, so that helps me to kind of figure out that kind of stuff. So let's see. The other one is Forex Factory. That's one that is helps identify events that are coming up. So here's coming up tomorrow. We have the core PPI, core retail numbers. So a lot of retail and PPI numbers coming up, and it comes out at 8:30 in the morning before the market opens, and they'll highlight it red or gold or yellow. Mainly, it's the red ones we want to look at. And so you can see, what's coming up. And what you want to do on this website is you want to make sure that you stick to the US, not all currencies. So you can change that to just the US. And a lot of times it will tell you, like is President Trump speaking, or is there Jerome Powell speaking? Those are always going to be red just because they have a big impact on the market. So, and you can look at, what's coming up next week. OPEC meetings coming up, employment numbers, job numbers. So lots of, stuff that comes up almost every day. And today we didn't have anything, or anything super critical. And then, we'll show you, okay, we're going to be closed Thursday. But that's a big one. And let's see, in bar chart, they have. Actually, let me show you this. Investing is one of my favorite. It'll show you some really good, what happened in the market today. Just an article that comes up. And all of these websites I'm showing you are free. So, you don't have to even register. You can just go to them. So you can, they're, they do have paid versions of them, but you don't need to get these news articles. And what'll happen in the morning is, um, in the morning about 5:30 or 6, there'll be an article that said, what's moving the markets? Every morning it comes out. So, and it, has a lot of cool, articles on what's going on, but investing.com is a great one. And Investors Business Daily has a great website. So this is, the big picture. It shows you, what's going on. Indexes jump on rate cut hopes. Um, and it'll, list like what stocks moved and things like that. So a lot of good stuff. This is after the market, but they'll have similar kind of reports in the morning. So so those are kind of the different websites that I like to look at. So they're free. And again, just to kind of recap the strategy, let me see if I can find it here. Is, what you're looking to do is you're looking to buy the at the money call, sell the at the money put, and then buy, this should say put, not out. Um, um, Out of the money put. And a great question about how far you want to make it. The wider you make the spread, the cheaper the trade is, or the least it costs, but the more max risk you have. So if you want to pay a little more and reduce that max risk, or you want to pay as least as possible, but no, you don't have as much downside protection. So, and it will also change the delta. The further you make it, you widen it, the higher that delta is going to go. So, so that is my stuff for tonight, guys. So, I hope this has been helpful. Um, and yes, I will share yeah, if you guys send me an email, and my email address is Brian, Terry, TERRYCFP @gmail.com. Send me an email. I will send you the slides so you can have them. And the other thing is, I will post this recording on my YouTube channel, and I will put it on the Facebook group as well. So that should, and then if you have any questions in addition to asking for the slides, just shoot me a question. I'm always happy to answer them for anybody. So, anything, oh, someone said, oh, you're certainly welcome. When would you do this instead of a poor man's cover call? I think I would do this if I was more bullish. I would do this strategy. If I was kind of less bullish, still somewhat bullish, I'd do the standard poor man's cover calls because there's really there's you have a little bit higher net delta on this trade. So it could, if the stock goes down, it's going to lose more than a poor man's cover call. So anyway, uh, I hope this has been helpful. It's great. I appreciate you guys jumping on the call. I'm going to stop the recording. So